Hello friends, welcome to Pro Trading Zone. So today market was really good with us and we made good profit today, and we can see market was not much out of the range that we decided to trade in, and market pivot points behaved as the way we wanted and exactly the point that we wanted. Today we had a market which just jumped up in the morning, made a little bit of high and then started coming down. This was the trend for last few days itself, but as today, yeah, as yesterday, today also it went up. As soon as it came down in first few candles, it started going up. So today's important pivot points were 36,746, then 36,498, 36,252, 36,070, and 35,807. So the significance of these pivot points were that you could take a trade or assume that these important pivot points will play an action in your price action scenarios. So generally these pivot points notifies that a market is going from a non-directional to directional format, or from directional format to non-directional format. So today as market came down, we drew our pivot point according to the day's high of the first candle and day's low of the first candle. As it did not bridge below the first candle low, our important pivot point 36,770 became a very important point for us. If it would have come down below it, we would have considered it as a downtrending market. But as it didn't come, we assumed that market would go up as the direction was in it in the first half of the day. Now, as soon as market came over here, I found that market is not going out of the range much. Even though this was showing too much of a green candles, I saw that there was not much of a steam into it. The decision for taking my decision, my trade over here, that is 35,000. So the reason why I took my short straddle and strangle at 35,300 was, if market would have been trending from here, it would have blasted really high because it would have just broken this point and it would be a trending day on upward direction. So I just took a trade at 36,300, which meant that if market would have been trending, I was in the right spot and I would have withdrew one of my position. So in short strangle, there are two plays at once. One is that call short and one is put short. So whenever this scenario comes that there is a trending market, we just withdraw one of our directional trade. That is, if market goes up, we cut our call short position. When market is going down, we cut our call short position. But as we do zone trading, in zone trading we make sure that none of the small movements in the market hamper with your psychology, as well as it doesn't make you take a trade that will create a loss. So theta decay is something that we bet on. To know about option Greeks, that is the theta decay or the other option Greeks, you should watch and search option Greeks by Pro Trading Zone. You will get the video, you should watch it, you will understand what exactly I'm talking about and why it is an important role to consider this option Greeks while taking a long buy option in call or put, or shorting call or put, or taking a non-directional trade. So once we took a trade over here, I will put a short.
Putting up two strategies, that is short strangle first at 35,900, put short at the premium of 127.5, and second 36,700 call short, that is 114.35 premium. We are making a loss of 7,625 rupees right now. The second strategy is short straddle. We have taken 36,300 call and put short for the strategy, and we are making a profit of 1000 rupees right now. We expect market to go sideways from here or little up or upside. If it crosses one of our pivot points, we would be exiting trade on that side and holding the other side trade for making a profit.
As you saw that market was working around here, and the closest thing that I could take was 36,300 as my point to take a trade for non-directional setup that we usually take. So once it formed a trade over here, it showed us some loss in the initial time, but as soon as it went up here and it created a top and market came down, I knew that market wouldn't be going above this point. So I drew a line over here and updated in the market analysis. And once the market was coming up again, I believed it would have been a U pattern which would have resulted in going up. But if I would have been a directional trade, I would have considered to be a very bullish format for that, because it came from down, it made a U pattern over here, and the market could have gone up, just up. So I would have shorted put, or I would have bought just a basic call and waited for it to go up. But contrary, as it happens most of the time, market started coming down. So here, if you would have booked, you would have considered this to be your uh, point of stop loss, but immediately it would have shown you a upper trend, and again you would have taken trade and it would have given you loss again. So this is the biggest problem while taking a directional trade. It is that you have to be very accurately predicting the direction of the market. But what we do is non-directional and zone trading. Just to give you an understanding about zone trading, we have considered these four pivot points as a very important pivot point. So once the market started going up, we considered this to be an important pivot point and took a trade over here. So for us, immediately 36,498, 36,070 was a very important pivot point. If either of would have broken, we would have cut our short position in that direction and let other side's short position run. That is, if market would have gone up, we would have cut our long call short position, and if market would have gone down, we would have cut our put short position. We expected once it created a double top and came down, I believed the market would be going exponentially down towards this point, that is 36,070, and it could have been a really sharp fall, but still we would have made money because we would have gathered some of the theta decay over here up till here, and later we would have cut our position, that is short put position over here, and let our call short position run. So even though my market view was unidirectional, that is I would have taken trade on either of the directional, I didn't make loss even though market went sideways. Actually it was a blessing for us. As we focus on theta decay, market just played around with our zone, and we took a trade of 36,300 and market closed at 36,334, just the difference of 34 points, and there were no big trends in the day. So anyways, option buyer would have really been frustrated by looking at the big green shoots and still not finding a good trend to make money. And here is the point that I will show where I exited my trade. I exited my trade approximately 2:30 to 3 o'clock, and we made a good profit. Finally, we are exiting all our trades. Right now market is at 36,080. We are exiting all our trades as we were trading in short straddle and strangle, that is non-directional trade. Even though market didn't go much on either of the direction, because of the theta decay we were able to make good profit out of it. In short straddle we are making 1,14,750 in our short call position and 53,625 in our short put position. In total we are making 1,68,375, that is 0.97% of our portfolio. In short strangle we are making a profit of 63,625 in our 35,900 put short and 65,625 in our 67,700 call short position. Total 129,250 rupees we are making profit of, and that is 0.79%. Exit all trades. So as you saw that we made a good profit over here. Once we took out our profit, we didn't bother much to look into the market again, because if market is giving you profit, you take that profit and you stay away. You do not put a bad faith that market rewarded you and you jump again. And as our day was really peaceful, we didn't see the negative side of the trade for very long. In the initial time, for first half an hour we saw some negative points, but later we were only making profit in both the direction. And this is how we do zone trading. So one more important thing about zone trading is that you do not take a trade until and unless it goes out of your zone. That is, if market wouldn't have gone out of 36,498 and 36,070, you do not take a trade. If market is in this zone, you make a good profit. As you saw, we made a good profit of approximately 1% in both the sides, in call short and put short, in short strangle and short straddle as well. So you can see that we made a good profit in our both the strategy, that is short straddle and short strangle. This was only possible because the market was in the zone and both our legs were positive. And one more thing I could consider as a chart pattern. First one was this M pattern over here, this M pattern, but it didn't conclude to a big rally. Later, I would have considered this is a cup and this again is a handle. But if it would have touched over here, I would have taken a trade for upside, but it would still have considered to be a loss because you have taken a wrong trade by looking at the only chart patterns without looking at the pivot points. So market came down and you made a loss. If you would have considered these two channels or these two line to make a one channel, you would have considered that market would go significantly up. But this was not the case. Market still came down to our point where channel was forming and it came down again. All your stop loss would have hit over here and you would have exited the trade in a loss. So for us, it was a no trade, because for us, this zone, this total zone was a no trade zone. So we didn't take a trade first once we put our short straddle and short strangle in the beginning of the day. And we were constantly making profit without doing anything. If you want to learn more about short strangle, what is a short strangle and how it works, you should search short strangle by Pro Trading Zone. So if you liked my analysis, if you liked my understanding of the market, my market view, how I take a decision, how to take a trade, why I shouldn't take a trade, or what are the thought processes that I told you right now, I would request you to please subscribe, share, like, give a recommendation to your friend, and come again in our live trading session. Whatever shorts showed you right now are recorded in the live session and put immediately up on my YouTube channel. So if you hit the bell icon, you will get a notification and you will be alerted as soon as possible, and you can make a view out of it, take a trade depending on that. But before taking a trade, I would strongly recommend you to watch my long videos, shorts that I put in the previous live trade session, to learn what exactly my thought processes are. The more you learn, the more you will make money and the smaller the losses are. So I again request you, please subscribe, like, share, and come in the live session. Thank you.